चेक। हाँ जी दोस्तों, क्या हाल है, क्या हाल है, क्या हाल है? आई होप यू आर ऑल डूइंग रियली रियली वेल दोस्तों। वेलकम टू दिस अमेजिंग कोड रिविजन। Yes, you heard it right, guys. Especially for the students who are not very comfortable with the Hindi language, I am going to start a code revision for your CA intermediate law. In this code revision, we are going to do chapter wise revision of each and every chapter in the shortest time possible. In the shortest time possible, all you need to do is you have to sit down, open the chapter along with me, and start reading with me each and every point. And by the end of these sessions, I can promise you that you would have 2x to 3x more productivity. So, for example, let's talk about FEMA. If Foreign Exchange Management Act is a chapter which you would yourself take 3 hours, in this session, I'll probably finish it in 1 hour 15 minutes or 1 hour 30 minutes. So, this is going to be purely exam focused revision. The reason why we are going to call it GOAT revision is because this, you will realize once you enjoy it thoroughly. Okay. Now, before I start, there are three things that I want to tell you. Number one, if you are a student who understands Hindi better, Hindi revisions are separately uploaded on my YouTube channel, Shubham Singhal. You can check that out. Number two, sir, for enjoying these revisions and making the most out of it, you will need this revision, this booklet, the summary book that you can see on my screen. Just one second, let me check if I'm live. One second. Okay, one second. It looks like I'm live. Yeah, okay, perfect. So you will need this booklet. Okay, so where do we get this book? Let me tell you, you will get the summary notes and my question bank for just 699 rupees on my website shubhamsinghal.com or on Shrestha website. You can get this booklet in both the websites. Sir, these books are something that you must have. It is just a 700 rupees of investment, but these books are something that you must have because only then you will be able to revise it on 1.5 day before exam because I have summarized the whole ICAI module in just 200 pages. And the third and most important thing, I will be uploading chapter wise revision and there will be a playlist of the same in my channel, Shubham Singhal and Harsha sir's channel. You can go and check that playlist, and based on that playlist, you can watch whichever chapter you like. Okay, I hope this is clear. Now, sir, without any further delay, let's begin this particular chapter, Foreign Exchange Management Act. Sir, I want you to give 100% attention. And for everyone who is watching this video, I don't want you to stop before we end this chapter. I want you to stay here with me till the end of this chapter. Till the end of this chapter, you will have to stay here with me. Okay, come on, guys, let's start. Okay, so we are going to start a chapter called Foreign Exchange Management Act 1999. This chapter came in 1999. So let me tell you this chapter has a weightage of 10 marks in your exam and it is a very easy chapter and easily manageable also. Okay. Now listen to me very carefully. Sir, why was FEMA Act brought into picture? FEMA Act was brought into picture because back in 1991 there was economic crisis. Our then finance minister Manmohan Singh decided that we need to do some reforms. We need to do some major reforms, and based on that reforms, they brought Foreign Exchange Management Act in 1999. Okay. After that, you don't have to read the purpose of this act. You just have to come straight and understand. You don't have to read the purpose of this act. You just have to come straight and understand what is forex regulation versus FEMA. Before FEMA, we used to have forex regulation. Sir, what is the difference between forex regulation and FEMA Act? Sir, Forex Regulation Act 1947. Then we had a Forex Regulation Act 1973, but now we have a Foreign Exchange Management Act. What is the difference? Sir, there are five differences I want you to remember along with me. Sir, this is the revision. I want you to remember things along with me. There is five difference between FERA and FEMA. Number one, objective. Sir, in FERA, our objective was to conserve forex, that we will not spend it, we will conserve it. But in FEMA, our objective is to promote and develop forex. We will earn more and will spend more. That is our objective. So there is a change in objective. Objective was to conserve forex. Now the objective is to promote and develop the forex. Number two, PRI, person resident in India. Sir, in case of FERA, the PRI was based on citizenship. If you are a citizen of India, you would be a person resident in India. But in FEMA, it is based on stay in India. It is based on stay in India, how much you stay in India. Number three, sir, strictness, please understand. In FERA is earlier regulation. Foreign exchange transaction is prohibited unless permitted. That is, unless we allow you to do it, everything is no. But in FEMA, forex transaction is permitted unless restricted. Unless we stop you from doing that, everything is allowed. So we changed our mentality altogether. Number four, mens rea, guilty mind. So what is mens rea? Basically, try to understand. For example, Mens rea is presumption of guilty mind. For example, when I was a kid, I was a very notorious person. I was a very naughty kid. Not naughty, I would say mischievous. Okay. Now listen to me. If I had a glass of water, okay, if I had a glass of water, and by mistake it fell from my hand. My mom used to tell me, you intentionally dropped it. It was not a mistake, you intentionally dropped it. So this is presumption of guilty mind. It is wrong. You presume that I intentionally dropped it. You should presume that it got dropped by mistake. It got dropped by mistake. But if you think otherwise, you prove it. But mens rea means what? Presumption of guilty mind. In FERA, sir, they were very wrong. They used to take presumption of guilty mind that if anyone is doing mistake, they have a guilty mind. But in FEMA, there is no presumption of mens rea. Mens rea is not presumed. Responsibility of the prosecution to prove. What is prosecution? Sir, the opponent party. They have the obligation to prove to us that you are guilty. So mens rea presumption is not taken. Fifth point, compounding of offense. So what is compounding of offense? Something that we will study in LLP. But please understand, in case of FERA, compounding of offense was not allowed. But in FEMA, all the offenses are compoundable. All the offenses are compoundable. Are you with me? Yes, sir. What is this? Sir, this is your difference between FERA and FEMA. Can it be asked in your exam? Yes, sir, it can definitely be asked. What is FERA versus FEMA? Objective. Repeat along with me. It was to conserve forex, now is to promote and develop forex. Number two, person resident in India was based on citizenship, now it is based in stay in India. Number three, strictness. Foreign exchange transactions were prohibited unless permitted. Here it is permitted unless restricted. Number four, mens rea. What is mens rea? Guilty mind. In FERA, there was a presumption of mens rea, but in FEMA, there is no presumption of mens rea. Compounding of offense. In FERA, compounding of offense was not allowed. In FEMA, it is definitely allowed. So these are the five differences that we have to remember, sir. After that, we start certain important sections. Sir, section number one, applicability. Where FEMA is applicable to whom? Sir, FEMA applies to whole of India. To whole India and also to branch office agency. When I say BOA, it is branch office agency outside India owned or controlled by a PRI. Outside India owned or controlled by a PRI. Listen to me very carefully. Sir, what is a PRI? PRI is a person resident in India. If they have any branch office or agency outside India that which is owned and controlled by PRI, that will also be, then FEMA will also apply to that. Sir, we will understand a little bit later on once we understand person resident in India. Okay. Now, sir, section 2 talks about definition. Definition, straight away, we will first come to the most important definition, which is person resident in India and person resident outside India. Sir, I will first explain that most difficult section, which is person resident outside India. What do you mean by a person resident outside India? Person resident outside India means a person who is not a resident in India. Wow, sir, what a revision! What a revision, sir. Yes, person resident outside India means a person which is not a resident in India. But what is the meaning of person resident in India? Sir, such an important definition. You see, in my summary notes, I have given these references. If you look at these references, these are basically reference to the questions in the question bank, which is related to this definition. So along with the concepts, you can solve the questions also. Okay, now coming back, sir. What is the meaning of person resident in India? Listen to me very carefully. Sir, person resident in India means a person residing in India for more than 182 days. For more than 182 days during the course of the preceding financial year, but does not include person who has gone out of India or who stays outside India for employment, for business or vocation, or for any other purpose. In that circumstance, as would indicate intention to stay outside India for uncertain period. Eh? Okay. A person who has come to or stays in India in either case. These two people will not be included. However, if such person has come to or stays in India for any following purpose, he shall be considered as a PRI, irrespective of the number of days in the preceding previous year for employment, business, or intention to stay uncertain period. So let it be. I'll explain it to you. Listen to me. If you have a sample notes, if you have a rough notes, you can scribble it there. Scribble right along with me for better understanding. Sir, I am trying to explain what is the definition of a person resident in India. Okay, listen to me very carefully. Okay, so they say that if you want to become a person resident in India in the preceding financial year, you should have stayed for more than 182 days. Sir, I want you to observe here, it is more than 182 days. Guys, in Income Tax Act, you also study direct tax. In Income Tax Act, residential status is more than equal to. Here it is more than 182 days. Okay, there is no equal to. There is no equal to. Equal to is not there. After that, please understand, although you will become a person resident in India, there are exceptions. Sir, what are the exceptions? Sir, there are two exceptions. Sir, exception number one, if you go outside India. So in this year you went outside India. Why did you go outside India? Sir, either for employment or for business or vocation, not vacation, not vacation, business or vocation, or for any other reason with an intent of uncertain period. Like we don't know for how many days you are going to stay. In these three cases, if you go outside India, then we will not consider you a PRI anymore. You will become a PROI. Sir, think logically, no. If a person is going outside India for employment, how is he resident of India anymore? Now he has become a resident outside India. He has become a resident outside India. Now coming to the other part, what if, and in the other case, if he comes to India in any other case, like for example, a foreign tourist, sir. For example, a foreign tourist, Elon Musk. Elon Musk came to India for 7 days of exploring India. Will we say he is a person resident in India? No, sir. Any person who comes to India normally will not be considered as a person resident in India. So basically, person resident in India is more than 182 days in the last year. But if you go outside India or if you're coming in India generally, so you'll not be considered as a PRI. But however, there is one more exception to this. There is one more exception to this. Except if a person comes to India for what? For employment, for business or vocation, or for uncertain period. If he comes to India for uncertain period, he will become a PRI. He will become a PRI. If he comes to India for uncertain period, he will become a PRI. I want you to keep writing these things along with me. This is also a scribble revision. This goat revision, the revision, why we call it as a goat revision is because there is a scribble revision also. So we will write down a lot of tiny things which is very important for you. So listen to me very carefully. Okay. Okay, guys. Are you with me? Yes. Okay. Now listen to me very carefully. Sir, you said this is the definition of PRI. So simple, let's keep it simple. PRI means a person who stays in India for more than 182 days. Number two, PRI does not include a person who goes outside India for these three reasons. Remember these three reasons. What are the three reasons, sir? The three reasons are employment, business or vocation, or for any uncertain period, or he comes to India for in any other manner. In this case, he will not be a PRI. But if he goes outside, if he comes to India for employment, business, vocation, or uncertain period, he will become a PRI. Sir, I will explain this to you again with examples. Listen to me very carefully. Sir, example number one. I stayed in India. If you can write this down, very good. If not, that is also okay. But listen to me. Sir, example number one. In previous year 24-25, I stayed in India full year, 365 days I was here. What will be my residential status in 25-26? Sir, because this is a revision, I will move a little fast because I am sure most of you already understand the concept. But for those who don't, you will have to wait and completely understand slowly. Okay. So 24-25, I stayed full year. So this year I will become a PRI, person resident in India. Sir, again, 24-25, I stayed for full year. Then, listen to me, in 25-26, on 1st of June 2025, I left India. On 1st of June 2025, I left India. Where did I go, sir? I left India and I went to US for employment. Sir, try to understand. Here, last year I was here for 365 days, but this year I went for employment. So please understand, from 1st April 25 to 1st June, I will be a person resident in India. But after that, when I go outside India for employment, I will become a person resident outside India. Yes, sir. Sir, in case of Income Tax Act, in Income Tax Act, your residential status is for full year. Your residential status is for full year. But in case of this particular act, listen to me very carefully. For let's say you ask Ramharsha sir. You ask Ramharsha sir. Sir, what is the can residential status be changed in between the year? No, sir. It is for full previous year 24-25, right? But in this case, your residential status for the first 3 months is PRI and for the rest 9 months is PROI because you left India for employment. Or if you go outside India for business or vocation, etc. Number three, sir. Sir, same question. In 24-25, I stayed here for full year. But this year, 1st of June 25, I left India for higher education. I went outside for higher education. Sir, if you go outside India for higher education, listen to me very carefully. Sir, RBI had issued a circular. that if you go for higher education, you usually will end up doing job there and you'll not come back to India. So even if you're going for higher education, it will be treated as if you're going for employment only. And that is why you will be a PRI here and then you will become a PROI. Are you with me? Sir, are you with me till here? Yes, sir. Continuing the examples, listen to me very carefully. So previous year 24-25, I was here for three. I was not here. I was not here. For the first time in 25-26, I came to India on 1st of June 2025. Okay. On 1st of this will be 2 months, huh? The first one will be 2 months and 10 months. 1st June, huh? So 2 months PRI, 10 months PRY. I think I said 3 months and 9 months. It will be 2 months and 10 months. Guys, in this case, listen to me very carefully. For the first time I came to India and I came here for employment. Sir, listen to me very carefully. For the last year, I was not in India. I came to India for the first time in my life and I came here for employment. Then, in that case, Raja, listen to me very carefully. Sir, you will be a PROI last year, of course. You will be a PROI at the start also. But the day you came in India for employment, you will become a PRI. But, sir, 1 second. To become a PRI, in my preceding previous year, I should have stayed for 182 days now. I said, no, boss. In this particular case, it is not applicable. If you are coming to India for employment, business, or vocation, or for uncertain period, then in that case, you staying here for more than 182 days in the preceding year is not relevant. You directly come and you stay here, not a problem, and you will become a PRI. Once you become a PRI, the provision of this chapter will apply to you. The provision of this chapter will apply to you. So this is more or less the definition of PRI for in case of an individual. See, PRI definition that we just studied, the definition that we just studied was for individual. So this is what we studied for individual. Now let's come to any artificial person. Sir, artificial person as in company, branch, office, agency. So very simple, sir. This is also very interesting. Listen to me. Dosto, guys, hello, guys. Sir, if there is a company, how can it become a PRI? Sir, if it is incorporated in India, then it will become a PRI. No questions asked, it will become a PRI. But listen to me, this company must have some branch, office, or agency in India. Sir, what is branch, office, or agency? Sir, any showroom you have, it is a branch. Any office you have, sir, any branch, office, or agency that you have in India, even if it is owned or controlled, even if it is owned or controlled by a PROI as in outsider. If the branch office or agency is in India, because it is in India, this branch office or agency will become a PRI. Sir, what am I saying? A company which is incorporated in India is a PRI. A branch office or agency which is in India, owned or controlled by anyone, it will be a PRI. Similarly, sir, listen to me very carefully. Sir, a branch office or agency outside India, which is or controlled, owned or controlled by a PRI will also be a PRI. What do you mean, sir? I'll tell you an example. Sir, Tata Motors. Can you tell me Tata Motors is a PRI or a PROI? Sir, Tata Motors is a company which is incorporated in India, so it is a PRI. Sir, Tata Motors controls a branch which is in US. Branch which is in US. That branch is outside India, sir, US. Now tell me whether that US branch will be a PRI or a PROI. Sir, any branch or office or agency outside India owned or controlled by a person resident in India will be considered as a person resident in India. So it will be a PRI. It will be a PRI. I'll ask you an exam question, sir. Sir, there's a company which is in Singapore. Okay, company which is in Singapore. It has a branch which is in India. Sir, the company owns a branch in Dubai. And that branch in Dubai is controlled by by this Indian branch. This branch in Dubai is controlled by this Indian branch. So company in Singapore has a branch in India, has a branch in Dubai. Can you tell me the residential status of this company, this branch, and this branch? Can you tell me the residential status of these people? Yes, please. Sir, the company outside India in Singapore is a person resident outside India. But the branch which is in India, because it is in India, it will become a person resident in India. What about this Dubai branch, sir? Sir, although it is owned by a PROI, but it is controlled by a PRI. Any branch outside India which is owned or controlled by a PRI will be considered as a PRI too. So although owned by Singapore branch, it is controlled by Indian branch and hence it is a PRI. This is your complete definition of PRI, sir. This is something which you must have written in the notes. But all these things that I just told you is written here, here. Everything that I just told you is written here. Everything, all the examples that I gave you is all written here. Okay. But sir, whenever you talk about a person resident in India or person resident outside India, you first have to understand what is the definition of a person. So the definition of a person is similar to what you study in your direct tax. What is the definition of person in direct tax, sir? Person includes an individual, HUF, company, firm, association of person, body of individual, and every artificial juridical person. Same, sir. Individual HUF, firm, company, artificial juridical person, association of person, and body of individuals. But apart from that, one more thing is also considered as a person, and it is agency, officer, branch. What I call as branch, officer, agency, owned or controlled by such person. What is the difference, sir? The difference is generally, for example, guys, Tata Motors has an office in Mumbai. Okay. Now they have a branch in Delhi. They have a branch in Delhi or branch in Chennai. Now listen to me very carefully. They have a branch in Chennai. Now listen to me very carefully, guys. Tata Motors has a branch, is from Mumbai. It has a branch in Chennai. Please try to understand. Usually these are not two person. We will say this is only one person. Person is Tata Motor. But for FEMA, this is one person. This is other person. Branch is also a separate person for the purpose of FEMA. In other act, it is not. It is not the same case in other acts. Okay. Are you with me? Are you with me? Yes, sir. So this is your point. Now coming to the next point, section number 2, definitions. Are you with me? Sir, we have some other definitions left, but did you understand person resident in India and person resident outside India? Did you understand? Yes? Sure. Okay, sir. Guys, this is a revision. Please understand this is not for those people who have not studied FEMA earlier. You need to have studied FEMA properly once. Only then you can revise it this fast. Because once we study FEMA, we spend 10 to 12 hours to understand each and every provision. In our regular classes that we take, it takes 10 to 12 hours to understand each and everything beautifully. Only then we can summarize it in one and a half an hour. Okay? Okay, guys. So definition, listen to me very carefully. Authorized person. Sir, what is authorized person? Law says that any foreign exchange transaction that you do, you have to do it through authorized person. But sir, who is authorized person? Authorized person is basically authorized dealers, money changers, offshore banking unit, and any other person authorized under section 10. So there are four people. Authorized dealer. Sir, when I say authorized dealer, I mean the banks. When I say money changer, what is money changer, sir? For example, when you go to airport, if at all you go to airport, there are a lot of counters where you can exchange rupees, you can get dollars. So those are money changers. Offshore banking unit means what? Sir, SBI has a branch in Dubai. Branch in Dubai. That Dubai branch is offshore banking unit. And the last one, other person authorized under section 10. So authorized person means what? Authorized dealer, money changer, offshore banking unit, or any other person authorized under section 10. Sir, what is foreign currency? Wonderful definition. Means any currency other than Indian currency. Foreign currency means any currency where there is no photo of Mahatma Gandhi ji. Foreign currency means any currency where there is no photo of Mahatma Gandhi ji, Indian currency. So basically, when we say Indian currency, na, it means coins also, it means notes also. Everything will become Indian currency. Now, coming to the next point, what is foreign exchange, sir? You said Foreign Exchange Management Act. So, foreign exchange management, what do we manage in foreign exchange, sir? Do we just manage the do we just manage the foreign exchange means what? Foreign currency? No, sir. Foreign exchange is a very broader word. Sir, foreign exchange means foreign currency and it includes any deposits, credits, or balance payable in any foreign currency. Sir, if for example, if a company Reliance Industry has deposited, there is a bank called JP Morgan. Where, sir? In USA. Okay. If Reliance has deposited rupees 1 crore in that particular bank, this deposit will also be considered as foreign exchange. So it is not just the rupees that you have, it is not just the money that you have, it is deposits also, it is credits also, and balance payable in any foreign currency. All these things are foreign exchange. Try to remember along with me, sir. Deposits, credits, or any balance payable in foreign currency. Next one, any draft. What is draft? Demand draft. TC, traveler's check. Traveler's check. What is traveler's check, sir? Sir, in like 20 years ago, 25 years ago, if you want to visit multiple countries, like you want to go to Japan, then China, then UK, and everything. So you don't have to convert the currencies every time. You can just go to the authorized person. You can take a traveler's check. The traveler's check is useful in Japan also, China also, UK also. So basically, traveler's check is also a foreign currency. Sir, LOC, letter of credit, BOE, bills of exchange, drawn in Indian currency but payable in foreign currency. It is usually payable in foreign currency. And the same thing which is payable in Indian currency. So draft, demand draft, traveler's check, letter of credit, bills of exchange, which is payable in foreign currency or Indian currency, or deposits, credits, or balance payable, everything will be considered as a foreign exchange. So try to remember, sir, can it be asked in your exam? Yes, sir. What is foreign exchange? Foreign exchange means foreign currency and includes deposits, credits, or balance payable in any foreign currency. Draft, traveler's check, bills of exchange, and letter of credit, payable in foreign currency or payable in Indian currency. After that, sir, what is foreign security? Sir, what is foreign security? What is meant by security? Security means in the form of stock, shares, bonds, debentures, or any instrument. These things are called as security. But what is foreign about this security? Sir, foreign security means it is denominated in foreign currency. For example, sir, if I ask you, I want to purchase Netflix shares. Can I purchase Netflix shares? Yes, sir. If you ask me for how much rupees will we get Netflix shares, I'll say no, you'll not get Netflix for rupees. You'll get Netflix for dollars. Reliance you can get for rupees, but Netflix you will get for dollars. Okay, so basically, foreign security means securities as in shares, bonds, debentures, anything which is denominated in foreign currency. Which is denominated in foreign currency. Are you with me? Yes, sir. And it includes securities denominated in foreign currency, but redemption on returns payable in Indian currency. What do you mean, sir? I'll tell you. Sir, Infosys is a company which is listed in US also. It is listed in US also. So the share price is $100, for example. But you know, they give you dividends in rupees. That's okay, sir. If it is a preference shares, if it is redeemed, when it is redeemed in rupees. So, sir, even if the redemption or even if the returns are in Indian currency, but if it is denominated in foreign currency, it will become a foreign security. So, when anyone says what is foreign security, the key word is it is denominated in foreign currency. Okay, it is denominated in other currency and not in INR. Okay, moving to the next two most important definitions are very, 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 very important definition. In fact, this was recently even asked in your exam. Current account transaction. Listen to me very carefully, sir. If you want, you can scribble along with me, sir. What is capital account transaction? You can scribble along with me, sir. What is capital account transaction, guys? You either scribble along with me or pay attention. Capital account transaction means a transaction which alters alters the following position. It alters the assets or liability, including contingent liability of a PRI outside India. It changes the position of my asset or liability outside India for a PRI, or it alters the position of asset or liability in India of a PROI. It changes the position of asset or liability in India for a PROI. So for a PRI, as in person resident in India, it changes asset liability outside India. For a person resident outside India, it changes asset liability in India. Such transaction will be considered as a capital account transaction. Also note that for a person resident in India, even if contingent liability changes, it becomes a capital account transaction. Sir, can you give me an example? I'll give you an example. For example, guys, I purchased an I from a US manufacturer. I purchased one asset. Okay, I purchased one asset and I said that I'll pay the money after 1 year. I'll pay $1 million after 1 year. So I did a transaction where I purchased an asset and I said I'll pay you after 1 year. Sir, in this case, when I did this transaction, my liability changed outside India. My liability before this transaction, my liability was zero. Now I have a liability of $1 million. So this transaction is a capital account transaction. But sir, I'll tell you something. There was a US manufacturer. I purchased assets and I paid cash. Today itself, I paid the money and I brought the asset. Is it a capital account transaction? The answer is no. Because sir, the asset that I have purchased, I have already brought it to India. That asset is not in US. And second thing, I don't even have to pay. The money is already paid. So the transaction is settled. So this is not a capital account transaction. Capital account transaction is when you have it creates asset or liability outside India. Now the third one, sir, if there is an US manufacturer and I purchased an asset from him and I said I'll pay you after 3 months, I'll pay you $1 million. Tell me, sir, is it a capital account transaction? Tell me. Sir, yes, this is similar to the first one. But the only difference is the answer is no. It is a current account transaction. What the hell, sir? What is current account transaction? Current account transaction means any transaction other than capital account transaction. Sir, this is a capital account transaction. No, my liability is getting created. No, but sir, this is a short term. You see, this is a short term credit facility. This is a kind of short term credit facility. It is not a long term liability. It is a short term credit facility. So law has clearly said that if it is a short credit facility, we will call it as a current account transaction. So basically, capital account transaction means a transaction which alters the position of asset or liability in India for a PROI or outside India for a PRI. Come again, in India for a PROI or outside India for a PRI. Okay, now listen to me very carefully, guys. Please, 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 guys. Hello, sir. Will you listen to me very carefully? Yes, sir. Sir, what is a current account transaction? Any transaction, any transaction other than capital account transaction. Okay. I want you to open a book and keep writing these things. The more you write, the more attention you can pay to what I'm telling you. Okay. So current account transaction means any transaction other than the capital account transaction. Guys, now listen to me very carefully. Current account transaction, they have clearly said that without prejudice to the generality of the foregoing, as in without prejudice to the generality of the foregoing, as in whatever we have written, the general provision that we made, without hurting it, without harming it. There are four things that we want to say is a current account transaction. What are the four things, sir? They said, look at the notes. They said, sir, payment with respect to foreign trades. If I purchase something and I made the payment, current account transaction. Sir, short-term banking and credit facility in ordinary course of business, very important. Short-term, sir, what do you mean by short-term? Sir, they have not explained what is short-term, but let's assume it is less than 6 months for our purpose. So if it is less than 6 months, short-term banking and credit facility in ordinary course of business will be considered as a current account transaction. So if you're taking short-term credit, although it creates a liability, but still a current account transaction. Number two, payment of interest on loan and as net income from investment. I'll tell you this. Understand, sir. I took a loan from JP Morgan of $1 million. I said I'll pay it after 1 year. Is it a current account transaction or a capital account transaction? Sir, this is a capital account transaction because it creates a liability. But when I pay the interest on this loan, this interest will be a current account transaction. Similarly, sir, I invested in shares of Netflix. It created an asset outside India. So this is a current account, this is a capital account transaction. But when Netflix will pay me dividend, it will be a current account transaction. Okay, so you can simply think, sir, anything that goes to P&L is a current account transaction. Anything that goes to balance sheet is a capital account transaction. This is the general concept that you can build. Okay. After that, sir, remittance of living expenses. Any living expenses that you're remitting for parents, spouse, children, etc., all foreign exchange management. After that, expenses with respect to foreign travel, education, or medical. These things are also current account transaction. So, sir, living expense, Medicare expense, education expense, travel expense, everything is a current account transaction. But any asset or liability kind of thing is a capital account transaction. So this is a complete detail of the definitions. We have given it a good amount of time. I hope you have understood it. I hope you have understood it. For those who are watching recorded, pause the lecture, take a deep breath, try to see what you understand, try to see which part did you find it difficult, read it again, close it, and then move forward with me. But you are not going to get up before you finish this revision in one go. This revision, you can keep listening to this revision multiple times, and that is how you will build a lot of confidence. You'll build a lot of confidence. Are you with me? Guys, are you with me? Yes, sure. Okay. Okay, guys. Okay, guys. Next, let's move forward. Please keep listening to me. Sir, now let's move to the next part of this section. Sir, section number three. Sir, section number three says that dealing in foreign exchange. What does it say? It says that no person shall deal in, read Whatever I tell you, read that much only. No person shall deal in foreign exchange or foreign security to any person other than our authorized person. Sir, you will not deal in any forex exchange other than through authorized person. I'll explain everything. Number two, no person shall make any payment to or for the credit of a PROI. Okay, sir. No person shall receive any payment from PROI otherwise than through an AP. Okay, sir. No person shall enter into financial transaction in India as a consideration for acquisition of asset outside India. Okay. So there are four things that we asked you not to do. You cannot do these four things. I said, what four things? Number one, you will not deal in foreign exchange. You will not deal in foreign exchange otherwise through an authorized person. Sir, what is dealing in forex exchange? I'll give you a simple example. Sir, you have to, let me introduce you to one of my brother. My brother, there is a brother, I have a brother called Rishabh. Rishabh stays in UK, which is London, UK, London. Okay. He is a PROI. He is a PROI, but he is basically from India, sir. He's born and brought up in India, but he shifted to UK now, London. Now, listen to me very carefully, please, guys. Please, please, please. Guys, now, for example, Rishabh came to India to see his parents. He came to India to meet his parents. Okay. Now, guys, listen to me very carefully. In India, he went to Pizza Hut to have a pizza. He went to Pizza Hut to have a pizza. Then after eating pizza, he decided to pay in dollar. Can he pay in dollar? No, sir. He cannot pay in dollar. If he is a for if he wants to deal in forex exchange, he will have to deal through authorized person. So via bank, he can make the payment, but he cannot directly pay dollars. In India, he cannot deal in foreign exchange like this. Number two, no person shall make any payment to or for the credit of a PROI. What is the meaning of credit of a PROI? Sir, so when Rishabh was in India, no, he had taken a life insurance policy LIC. Now, after he moved to London, he had to pay the life insurance policy premium. He said, "What? I'll first convert dollar to rupees and then I'll make payment. I don't want to do this." So his dad who is in India, he said, "Don't worry, Rishabh, I'll pay it for you." And he paid rupees 15,000 rupees to the LIC. Law said that no, you cannot do that. You cannot make any payment to the credit of a PROI. Why, sir? When you do this thing, we lose our foreign exchange. Ideally, that 15,000 rupees should come from US to India. But because you did this transaction, we lost it. That is why you are not allowed to do this. Number three, you shall not receive any payment from a PROI otherwise than through an authorized person. If I were to receive some money from Rishabh Bhaiya, I will take it through the bank. I will not take it directly. And moreover, listen to me very carefully. When you take it through an authorized person, so that authorized person, listen to me very carefully. So that authorized person will give you an inward remittance certificate. That bank will give you an inward remittance certificate. Only when you have that inward remittance, it will be assumed that you have taken it via bank. But for a transaction, if there is no inward remittance certificate, law will think that you have not done it through an authorized person. So basically, whenever you receive any payment, there has to be an inward remittance. I've showed you inward remittance in the class. Okay. Number four, sir, they shall not enter into a financial transaction as a consideration for acquisition of asset outside India. So, for example, I cannot say to Rishabh Bhaiya that Rishabh Bhaiya, you buy a property for me in London and here I will make a financial transaction. Here I'll make a financial transaction. That is, I'll pay on your behalf in India. I cannot say that Rishabh Bhaiya, in India I'll pay 2 crore rupees to your dad. You buy a property for me in London. No, no, you cannot do such transaction. It is a Hawala transaction, sir. Hawala transaction. You cannot do such transaction. It is not allowed. It is not allowed. Did you understand, sir? So you cannot deal in any foreign exchange. You cannot make any payment to credit of PROI. You cannot receive any payment from PROI otherwise through an AP. When you receive through an AP, you get an inward remittance certificate. If you don't get an inward remittance certificate, it will be presumed that you have received the money from a person other than authorized person. So basically, you have not complied with the law. And number four, you will not enter into a financial transaction in India as a consideration for acquisition of asset outside India. Okay, did you understand? That's it, sir. Come to section number four. So section number four says that except as provided in this act, except as provided in this act, like whatever we tell in this act, that you can do. Apart from that, no PRI shall acquire, hold, own, possess, or transfer. You cannot acquire, you cannot hold, you cannot own, you cannot possess, or you cannot transfer any foreign exchange, any foreign security, or any immovable property situated outside India. Any immovable property situated outside India, you cannot take it. Sir, only that, only what we allow that you can do from, but apart from that, if you want to buy foreign exchange, foreign security, or immovable property outside India, you cannot do it except as allowed in this act. except as provided in this act. So basically, we are saying that boss, whatever we are telling you in this act, only that much investment you can do. Apart from that, you cannot do anything. Apart from that, you cannot do anything. Are you with me? Yes, sir. Now, coming to the two most beautiful and important part of this chapter. Two most very important and very beautiful part of this chapter. But before I move forward, I need to know that whether you are understanding it. For those students who are watching recorded, so these kind of revisions takes a lot of effort, and I'm trying to make it in 100% English so that it can be beneficial for you. But if it is actually helping you, before I make more revisions, you will have to motivate me by telling me in the comment that whether it is helpful for you. How helpful it is for you, you let me know, because your appreciation is my motivation. And I think we can also understand it from the amount of likes that we get. I'll keep a very minimum target of this video, a like of 200 likes. 200. Will you help me achieve that? Minimum like of 200. And in the comment, you will let me know, sir, whether these things are helpful. I keep reading your comments. And if I find that, yes, it is very beautiful and it is helping the students a lot, I'll make more and more such revisions for you. Okay. Are you with me? Yes. Yes, guys. Okay. Now let's move forward. Please listen to me very carefully. Sir, like section number 5 and section number 6 are the only two sections that we have to study. But sir, you have to be very, very careful when you study this along with me. What is the flow of section number 5 and section 6? Listen to me. Sir, section number 5 and section number 6. Section number 5 talks about current account transaction. Section number 6 talks about capital account transaction. Sir, I'll tell you a normal rule, okay? The normal rule is that current account transaction is permitted unless prohibited. Unless we say no to do it, unless we prohibit you, it is all permitted. But capital account transaction is prohibited unless permitted. In capital account transaction, we have kept a little control, but capital account transaction is prohibited unless permitted. So you need to remember these two things. Current account transaction is completely allowed unless we stop you from doing that. But capital account transaction is allowed only that much as we permit. Apart from that, it is prohibited. Now, coming to the current account transaction, sir, listen to me very carefully. Current account transaction is easy to do. If you want to go to the authorized person to draw forex, draw or sell forex. If you want to purchase foreign exchange or you want to sell foreign exchange, you can easily do it if it is a current account transaction. But again, please understand, sir, central government was given power to put some prohibition. If central government wants, central government can put some prohibitions. And central government has used that power and made a rule called current FEMA, made a rule called Foreign Exchange Management Current Account Transaction Rules 2000. Foreign Exchange Management Current Account Transaction Rules. They have made a rules in which there is basically three schedules. Schedule 1, Schedule 2, Schedule 3. You need to understand Schedule 1, Schedule 2, Schedule 3. Sir, Schedule 1 talks about transactions which are prohibited. That is, you cannot do it. Schedule 2 talks about transactions which require CG's approval. And Schedule 3 talks about transaction which is which is allowed up to a certain limit. And beyond that limit, you will have to take RBI approval. So second one is you have to take CG's approval, and the third one is you will have to take RBI's approval. Third one is you will have to take RBI's approval. There are three provisions, sir. Schedule 1, Schedule 2, Schedule 3. Are you with me? Yes or no? Schedule 1 is prohibited, Schedule 2 is CG's approval, Schedule 3 is limit. Okay, there is a limit. Now, this is the base, sir. Now, try to understand. We'll read it from the book. Please come to the book and listen to me very carefully. Sir, it says that any person may sell or draw foreign exchange to or from an authorized person if such sale or draw is a current account transaction. Sir, if you want to sell foreign exchange or you want to draw foreign exchange from the authorized person, why? For a current account transaction, then we said it is doable. It is allowed. But sir, central government may impose restrictions on current account transaction. But central government will not do it alone, sir. Central government will do it in consultation with RBI. Will consult RBI and put such restriction. Now, using that rule, sir, using that power, central government has made this rule called Foreign Exchange Management Current Account Transactions Rules. Look at the word rules 2000. Look at the amount of questions that we have from this concept, sir. Look at the amount of questions that we have from this concept. I'll give you a FEMA master question, sir. I'll give you a FEMA master question. Let me show you. Let me show you. I have prepared a FEMA master question. So this is the no, this is different. This is different. I have prepared a FEMA master question. I think I don't have it here. I don't know if I have it here. One second. I think it's not here. But I'll show you a FEMA master question, sir. In that master question, in 3 pages, in 3 pages, I have summarized all these questions. Okay. When will you get that FEMA master question, sir? You'll get it in the description. You will find a link of my Telegram channel. There you will find this master question. Okay. So make sure that you solve that FEMA master question after this revision. Okay. Now listen to me very carefully, sir. What is Schedule 1? What is Schedule 2? Schedule 1. Sir, Schedule 1 talks about transactions which is prohibited. So there are 8 transactions which you don't have to understand with me right now because we do it in the class. Now you have to revise it along with me, retain along with me. So there are some current account transactions which are prohibited. What are those current account transactions? Number one, remittance out of lottery winnings. Sir, in India, if you won some lottery, you cannot take that money outside India. Number two, remittance of income from racing or riding or any other hobby. Sir, if you won horse racing income, horse riding income, those money also you cannot remit. So lottery income, horse racing, horse riding. Number three, remittance for purchase of lottery tickets, band magazines, football pools, or sweepstakes. If you want to take money from India to USA, for example, and if you want to purchase lottery tickets, football pools. Sir, what are football pools? Football pools are a way of gambling in football. Sweepstakes also gamble. Band magazines. Sir, band mags. Array, not those magazines. Banned magazines means there are certain magazines which are banned in India. We will not allow you to purchase that. So you cannot use money for you this gambling, betting, and everything. No, boss. Okay. Next, sir, for payment of commission. Commission on what? Commission on export made towards equity investment in joint venture or wholly owned subsidiary abroad of Indian companies. So basically, if you are doing any export, you cannot make payment of commission on that export made towards equity investment in joint venture or wholly owned subsidiary. After that, remittance of dividend by any company to which dividend balancing applies. Any company to whom dividend balancing applies, they cannot remit dividend. Number six, payment of commission on export under rupee state credit route. Sir, there is something called as rupee state credit route. Can you repeat along with me? Rupee state credit route. Sir, in that route, when you export something, you cannot pay commission on that. Except commission up to 10% of invoice value on export of tea and tobacco. On export of tea and tobacco. You cannot, basically, on export of tea and tobacco, yeah. Sir, when you export tea and tobacco, listen to me very carefully. Sir, up to 10% of the invoice value on export of tea and tobacco. Guys, come on, 6 points again. First 3 points are lottery winnings cannot be remitted. Horse racing riding income cannot be remitted. You cannot you cannot remit any money for purchase of lottery, football pools, sweepstakes, or any other banned magazines. These are three things. Then there are 2 points of commission. You cannot pay commission on export towards equity investment in joint venture or wholly owned subsidiary. Number two, you cannot pay commission on export under rupee state credit route. But there is one exception. If you're exporting under rupee state credit route, then you can pay commission of up to 10% on export of tea and tobacco. On export of tea and tobacco. Tea and tobacco in Hindi we call it chai sutta. Tea tobacco, chai sutta. In that you can pay commission of up to 10%. Okay. After that, if there is company to whom dividend balancing applies, they cannot remit dividend. Number six, payment related to callback services. There cannot be any payment related to callback services and remittance of interest income on funds held in NR Special Rupee Account Scheme. NR Special Rupee Account Scheme. In that scheme, if you earn any interest income, that interest income cannot be remitted. That interest income cannot be remitted. Are you with me, guys? Yes or no, sir? Yes or no, sir? Yes or no, sir? Yes. Sure. Sir, did you understand? Yes. This is your schedule one. These are the transactions which is prohibited. Sir, after remembering like this, now try to write down on in short. How do you write it? Number one, sir, lottery. Number two, racing or riding of horses. Number three, purchase of lottery tickets, etc. After that, there was commission on export. The first export was export commission on export towards equity investment in joint venture or wholly owned subsidiary. Number two, commission on export under rupee state credit rate. Sir, do you need to remember the whole sentence? No, sir. You just need to remember that this particular sentence is written in Schedule 1 of Foreign Exchange Management Current Account Transaction Rules 2000. That is what you need to remember. After that, sir, dividend by a company to which dividend balancing applies, payment related to callback services, and interest income in NR special rupee account. In these three cases, eight cases, you are prohibited from paying your what? From remitting foreign exchange. You cannot send foreign exchange outside India. Number two, sir, Schedule 2. I told you Schedule 2 talks about transactions for which central government's approval is required. So, transactions which require prior approval of Government of India to process foreign exchange. Number one, sir, cultural tours. Listen to me, listen and try to understand. Sir, cultural tours. If you want to perform some cultural tours outside India, you can definitely go and do it, but you will have to take approval of Ministry of HRD, Ministry of Human Resource Development, nothing else. Ministry of Human Resource Development. Okay. Number two, if you want to do advertisement in foreign print media, who are you? You are a state government or it's PSU. You are a state government or a public sector undertaking of a state government. If you want to do advertisement in foreign print media and it exceeds $10,000, so let me take example of each also so that you can understand cultural tips. Sir, for example, if Odisha people want to go and perform Bharatnatyam or Kathak in USA, you'll have to take approval. Okay. Number two. Sir, if the Tamil Nadu government wants to do some advertisement in US, and that advertisement costs more than $10,000, they will have to take approval of Ministry of Finance. They'll have to take approval of Ministry of Finance. But sir, if that advertisement is for three purpose, then approval is not required. What are the three purpose? Number one, to promote tourism, bring foreign investment, and for international bidding. Tourism, foreign investment, and bidding. It is bid. It is bidding, investments, and tourism. If you are doing it for these three purposes, then approval is not required. But other than that, if you are doing advertisement in foreign print media and it exceeds $10,000, and this is for state government and PSU, then you will have to take approval of Ministry of Finance. Number three, this three, 4 points are not so important, sir. Sir, remittance of freight of vessels chartered by PSU. If you are bringing a vessel and you are paying the freight, then you will have to take approval of Ministry of Surface Transport. Similarly, sir, if you're importing something through the ocean transport on a CIF basis, what is CIF basis? CIF is basically cost plus insurance plus freight. In that case, you will have to again take approval of Ministry of Surface Transport. Okay. Sir, what is multimodal transport operators? Listen to me very carefully. Sir, multimodal transport operators like Blue Dart. Blue Dart brings something via air, then land, then water. If there is multimodal transport operators and they want to make some payment to their agents, then they will have to take a registration certificate. Registration certificate. So these three things are related to something freight or vessels. So if you're paying freight, Ministry of Surface Transport, bringing something through ocean transport, CIF basis, cost insurance freight basis, then your Ministry of Surface Transport and multimodal transport operators. In that case, you will have to take registration certificate. Okay. After that, next one is important, sir. Remittance of hiring charges of transponder. So transponder is a device. Transponder is a device that you take for either for TV channels or for internet service providing. Earlier, you used to take transponder. So when you are paying the hiring charges, you will have to take approval of the respective ministry. You don't have to remember the name of the ministry, but if you want to, for TV channels, the ministry is Ministry of Information and Broadcasting. You can remember like this: TV channels basically broadcast. And for internet service provider, it is Ministry of Communication and Information Technology. It is communication. Okay. Now, after that, sir, remittance of container detention charges. If you had to pay container detention charges, if someone detained your containers as in ships, if it were detained, then you'll have to take approval of Ministry of Surface Transport. After that, sir, the next 2 points are very important. Listen to me very carefully, guys. Sir, this one is super important. Remittance of prize money or sponsorship of sports activity by a person other than international, national, state level sports body if amount is more than $10,000. Sir, what are you doing? There are four conditions. Number one, you are paying prize money or you are paying sponsorship. Okay. Who are you? You are a person who is not a sports body. Sports body, as in, sir, for example, BCCI is a sports body. Sir, if you are an international level, national level, or state level sports body, then it is fine. If a person other than sports body is paying prize money or sponsorship for any sports activity, and that amount exceeds 1 lakh dollar, 1 lakh dollar, then in that case, you will have to take approval of Ministry of Human Resource Development. You'll have to take approval of Ministry of Human Resource Development. Sir, prize money or sponsorship money of sports activity. Sir, I'll tell you for example. For example, Neeta Ambani. Neeta Ambani in Mumbai Indians, there is a player, for example, let's say, I don't know, who's the, do you know any foreign players who's in Mumbai Indians? Like any foreign international players who play with foreign Mumbai Indians? Any player, sir, Mr. X. Now, Neeta Ambani decided to give $2 lakh to that player because he performed very well. You'll have to take approval of Ministry of Human Resource Development. Why are you wasting our dollars? Why are you wasting our money? Don't waste our money. You will have to take approval because it exceeds $1 lakh and you are not some sport body. But if BCCI decides to make the payment, they'll not have to take approvals. And the last one, remittance of membership remittance of membership of P&I club. What is P&I club? Protection and Indemnity Club. Protection and Indemnity Club. So if you remit any membership amount of that, then in that case you will have to take Ministry of Finance. Ministry of Finance approval. So basically these are the approvals of CGs that you will have to take, sir. Multiple approvals of CGE that you will have to take. Okay. Okay. Aditya is asking, sir, this is pre-recorded. No, I'm taking live along with you right now. It is not pre-recorded. Okay. 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 Alright, guys. So basically, Schedule 2 talks about transactions which requires approval of CG. I can assure you this kind of summary notes, it is impossible to get anywhere. At present, there is no book other than this in the market which can give you this level of summary for this concepts. Okay. Now coming to the next point, listen to me very carefully, please, guys. Hello. Sir, what is Schedule 3? Hello, 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 hello. Sir, what does Schedule 3 talk about? Listen to me very carefully. Sir, Schedule 3 says that, hello. Sir, Schedule 3 says that if you are an individual, Schedule 3 says that transactions which in excess of the limit require prior approval of RBI. Very simple, sir. Before reading, I'll give you good context. Context is Schedule 3 talks about two people. One is individual, okay, and one is other than individual, okay. For individual, we have made it very clear, sir. For individual, there is a limit of dollar 2,50,000, 2,50,000 per annum. If you ask me how much is dollar 2,50,000, sir, it is approximately 2 crore rupees. If you take it at the rate of 80, it is 2 crore rupees. But $2,50,000 per annum is the limit in which you can do current account transaction, such as your, sir, traveling, medical, education, your immigration, everything you can do in that 2,50,000 rupees. But if you want to spend more than 2,50,000 rupees, you will have to take approval of RBI. You'll have to take approval of RBI. This is the basic provision, sir. Now, generally, so what is the provision? The provision says that you have a limit of dollar 2,50,000 only per annum in which you can do private visit to any country. You can gift or donate your wish. You can go outside India for employment. You can take emigration. Emigration means completely shifting to a new country. Sir, you can have close relatives abroad. You can travel for business or whatever. You can have medical treatment or you can do studies abroad or any other current account transaction. Whatever you want to do, you do. But the limit is dollar 2,50,000. Beyond dollar 2,50,000, you'll have to take approval of RBI. But then we said that there are two exceptions. There are two exceptions. What is the provision? The provision is 2,50,000 you can spend. Beyond that, you'll take RBI approval. But there are two exceptions. Number one, sir, if you are going for emigration outside India, or if you are going for medical treatment outside India, or if you are going to for studies abroad, in these three cases, please understand, for emigration, I might need $400,000, $400,000. Why, sir? Because the country of emigration is deciding that. For example, I want to move to Canada. So Canada is deciding that I'll have to pay how much. So for medical, the hospital will decide how much I have to pay. For studies, the university will decide how much I have to pay. So, sir, if I go to the bank to authorized person and I show the certificate from these people, then I might not require RBI approval even if the limit exceeds 2,50,000. So, for example, if I have to go to Canada and I have to pay $400,000, so I will take a certificate from that particular country that I have to pay dollar four lakh, dollar 4 lakh, and then I'll go to the authorized person. Authorized person will give me dollar 400K without approval of RBI. There are only three exceptions: immigration, medical, studies. Immigration medical studies. Immigration medical studies. Are you with me? Yes, sir. The other exception is that, listen to me. There is a concept of a person who is a PRI but not permanently resident. What do you mean, sir? PRI but not permanently resident. What do you mean? Guys, it means that, guys, what does it mean? It means that PRI but not permanently resident means, listen to me very carefully. Sir, PRI but not permanently resident means, I'll give you an example. For example, my Rishabh Bhaiya, who is in London, he came to India. He came to India for job. Listen to me very carefully. He came to India for a job. Now, when he came to India for a job, he is having a salary of $500K per annum. Now, sir, what would he want to do? He would want to send the whole salary to his family, which is still in London. Correct? But if you say no, 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 you will have to send only 250K. Above that, you will require RBI approval. No, sir, this is not fair. This is not fair. Although he is a person resident in India, but he's here very shortly, sir. He'll be here for 2 years or max 3 years. So in this case, he is a PRI, but he is not a permanently resident in India. So he has come to India for a temporary job. In that case, what will you do, sir? If he has come to India for a temporary job, in that case, hello, listen to me very carefully. In that case, he is allowed to remit his net salary. The limit is not 250K. The limit is net salary. What is net salary? Sir, salary less taxes, less PF, etc. Provident fund, etc. So whatever savings he has. So for example, he got 500K. Sir, 100K he paid as taxes. The remaining 400K he can remit without RBI's approval. Okay. So I said, sir, generally the limit is 2,50,000. Beyond that, RBI approval is required. But in two cases, RBI approval will not be required, even if the limit exceeds 2,50,000. Immigration, medical treatment, or studies abroad. You if you furnish the certificate from particular university, hospital, or country of immigration, we will allow you without RBI approval. And number two, if you are a PRI but not permanently resident. Sir, how do you define PRI but not permanently resident? It means a person who has come to India for employment but is not going to stay here for more than 3 years. The employment is less 3 or less than 3 years. Are you with me? Sir, are you with me? Yes. Did you understand? Yes, sir. Sir, this is your whole schedule 3 individual part. I explained you everything that is written here. So you see, for provided for DGH is immigration, medical treatment, and for education, individual may avail foreign exchange more than 2,50,000 if it is so required by country, medical institution, or university, respectively. If required, you can spend it. And number two, sir, in case of a PRI but not permanently resident in India, he can make a remittance up to his net salary, that is after deduction of TDS and PF. What is PRI but not permanently resident? Sir, he has a PRI who has come for employment, but it is not more than 3 years. It is not more than 3 years. He is a PRI but not permanently resident. Are you with me? Sir, are you with me? Yes. Yes. Okay, sir. Moving on to the next beautiful part. Guys, guys. This revision may be a little heavy for you, but yeah, that is the beauty of it. This is almost done. Once you are done with Schedule 3, once you do current capital account transaction a little bit, the chapter is over. It will hardly take us 20-25 minutes more. But that's it. The more number of times you listen to this video, the more beautifully you have a hold on this topic. At least 4 to 5 times you have to listen to this revision. Okay. Now, guys, next portion. Please listen to me very carefully. Facilities for person other than individual. So for individual, I told you there is a limit of $250,000. But for other than individual, sir, there are 4 different cases. You have to remember these 4 different cases. Number one, sir, first one is, for example, if you're a company and the company wants to give a donation for creation of chairs outside India or contribution to funds. That's it. If you want to give donation for creation of chairs outside India or contribution to any funds, in that case, limit the limit is 1% of forex earning in the last 3 financial year or $5 million, whichever is lower. This is the limit. So the limit is 1% of forex earning of last 3 years. So they have not written average, sir. They have not written average. If they would have written average, it means you would have taken average, but they have not written average. So average is not written. So basically 1% of you will take aggregate. So last 3 years forex earnings or $5 million, whichever is lower, will be the limit. If up to that amount you give donation, it's fine. If you give donation beyond that amount, you will have to take RBI approval. This is the limit for donation for creation of shares. Remember along with me, 1% of the forex earnings of the last three financial years or $5 million, whichever is lower. Point number two. So if you sold any flats or plots in India, any commission to agent abroad for sale of flats or plots in India, you are giving a commission outside India to a person for sale of flat in India. So the limit is $25,000 or 5% of inward remittance, whichever is higher. 5% of inward remittance, whatever money came, or $25,000, whichever is higher. To this amount, no approval. Beyond this amount, RBI approval. So, if you're taking any consultancy, if the consultancy is related to infrastructure, then $10 million. If the consultancy is other than infrastructure, $1 million is the limit. Beyond that, RBI approval. And the last one, pre-incorporation expense. If you are reimbursing any pre-incorporation expense, the limit is 5% of investment brought into India or 100K, whichever is higher. 100K, whichever is higher, and beyond that, RBI approval. So you see there are four limits. I'll summarize it for you, sir. What are the four limits? I'll summarize it for you. There are four limits. Look at the screen. Sir, if you want to donate outside India, it is 1% of your forex earning or $5 million, whichever is lower. But for other, if you are, for example, what was the second one? If you are paying any commission, it is 5% of inward remittance or $25,000, whichever is higher. Sir, if you are talking about consultancy, for infrastructure, it is $10 million. For other, it is $1 million. Okay. And when you talk about pre-incorporation expense, sir, 5% of investment that you brought into India or $100K, whichever is higher. This is how you figure out the limit. To these limits, no approval. Beyond this limit, RBI's approval will be required. Okay. This is for whom, sir? This is for this is for artificial person, not for individual, other than individuals. But understand, for these people, $250,000 limit is not relevant. For these people, $250,000 is not relevant. 250,000 was relevant only for individuals. Only for individuals. Now understand a little more, a few more things, sir. These things can be asked in your MCQs. Sir, again, let me tell you what was Schedule 1. Schedule 1 is you cannot do it. It is absolutely prohibited. Schedule 2 is you can do it, but you require CG approval. And Schedule 3 is basically you can do it up to a limit. Beyond limit, RBI's approval. Now listen to me very carefully. Sir, it says that approval of a transaction under Schedule 2 or 3 will not be required. There is no requirement of approval if remittance is through a resident foreign currency account, RFC account, or through EEFC account, exchange under foreign currency account, except for remittance of membership of P&I club or Schedule 2, payment of commission or pre-incorporation expense. Payment of a pre-incorporation expense and everything. Listen to me very carefully, sir. I'll explain it here. Listen to me. Sir, you remember Schedule 2, which requires CG approval. Schedule 3, beyond limit, requires RBI's approval. But we said approval is not applicable if you're paying through RFC account. What is RFC account? Resident foreign currency account. Or you're paying through EEFC account. Exchange earners foreign currency account. Okay, EEFC account. But guys, in EEFC account also there is an exception. What is the exception? Sir, the exception is that even if you pay through EEFC account, in Schedule 2, you will have to take approval for P&I club. And in Schedule 3, you will have to take approval for paying commission or pre-incorporation expense. For these things, even if you pay it via EEFC account, you will have to take approval. But sir, there is no exception in case of RFC. In RFC, whatever payment you make, you don't have to take any approval. But for exchange earner foreign currency account, for example, I want to conduct a cultural tour. If I pay through exchange earner foreign currency account, no approval is required. But if I pay for P&I club membership, then approval will be required. Okay, sir, we understand this very beautifully in the class, but now also I'm trying to make charts for you so that you get a complete grip. Try to understand. Okay, now the last point, sir. Sir, if a person is on visit abroad, he's roaming around in, for example, Thailand, and he can incur expenditure stated in Schedule 3 Schedule 3 as in the travel, gifts, donation, everything. If he incurs it through international credit card to the extent of limit. So basically, even if you're exceeding limits of $250,000 to the limit of international credit card, you can easily spend. There is no restriction. There is no restriction. These are the 2 points, and these are the two exceptions. And with this, your current account transaction comes to an end. Your current account transaction comes to an end. Okay. Take a deep breath. Sir, what about capital account transaction? Sir, capital account transaction means any transaction which alters the position of asset or liability, including contingent liability outside India for a PRI, or contingent asset or liability in India for a PROI. So for a PRI, it alters asset or liability outside India. For a PROI, it alters asset or liability in India. Okay, then in that case, it becomes a capital account transaction. Guys, in capital account transaction, we have given power to RBI also, and we have given power to CG also. Sir, capital account transaction, I can divide into two parts. One is debt instruments, the other one is equity instruments. Okay. Sir, RBI can put restrictions on debt instruments, and central government can put restrictions on equity instruments. RBI can put restrictions on debt instruments. Sir, it is written that RBI, in consultation with CG, shall classify classes of capital account transaction involving debt instrument which is permissible and put conditions on them. Similarly, central government can, in consultation, put put limitations on non-debt instruments as an equity instrument. So basically, for debt instruments, they have given the power to RBI, but for equity instrument, they have given power to RBI, but to CG, but they'll consult each other. RBI will give in consultation with CG, CG will give in consultation with RBI. They'll consult each other, but they have divided powers. Now listen to me very carefully. Sir, RBI can put restrictions on debt instruments, but there are two transactions on which no restrictions can be put. There are two transactions on which RBI or CG shall not impose restrictions. Number one, payment due on account of amortization of loan or repayment of loan. Sir, for example, I took loan from JP Morgan. It is a capital account transaction. Now I am repaying that amount. That is also capital account transaction. When I have to repay that amount, I went to the bank. I said, bank, give me dollars. I have to repay to JP Morgan. Bank said, no, 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 no. There is a restriction. No, sir, you cannot put any restriction on repayment or amortization of loan. No, 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 no. Number two, depreciation of direct investment in ordinary course of business. Sir, please try to understand. These are the two transactions on which restrictions cannot be put. What are these two transactions? Number one, payment with respect to amortization of loan or repayment of loan. You cannot restrict that. And number two, depreciation of direct investment in ordinary course of business. Depreciation of depreciation of direct investment in the ordinary course of business. There can be no restriction on this. You have to remember this, sir. C23, it has asked me your exam. There can be no restriction on payment due on account of amortization of loan or repayment of loan. And number two, depreciation of direct investment in ordinary course of business. Okay. Okay. Okay, sir. Now coming to point number 4 and point number 5. This is basically section 6 subsection 4 and section 6 subsection 5. What does section 6.4 says, sir? Please listen to me very carefully. We are talking about capital account transaction. It says that any PRI, imagine I am a PRI, imagine we are a PRI. You are also PRI. Sir, a PRI may hold, own, transfer or invest. Hold, own, transfer or invest in any foreign currency, foreign security or immovable property outside India. Wow. You can invest in a for immovable property outside India, provided that it was acquired, held, or owned when he was a PROI or inherited from a PROI. Let's just put time to understand this. Sir, it is saying that if there is a PRI, if there is a PRI, who is a PRI, sir? I am a PRI. Sir, if PRI, the question is whether PRI, as in myself, Shubham Singhal, can I hold foreign exchange? As in, can I have dollars? Can I have foreign security? Like, can I invest in the shares of Netflix? And can I have immovable property outside India? Can I have a property in Dubai? Can I have a property in Dubai? I'm sure Harsha sir must be having a property in Dubai also. You let me know in the comment whether he has one. Okay. But I think he has a property in Dubai. Okay. So, for example, if I want to invest in a property in Dubai, can I do it? Law says that, sir, we will allow you only under two circumstances. Number one, If it was acquired when you are a PROI, okay, so you are saying new investment cannot be done. You are saying that if I was a PROI, like for example, in 2010, 2011, I was a PROI of Dubai. I stayed in Dubai. And that is when I invested in a property in Dubai. And later on, I became a PRI. So law says you can continue, no problem. And number two, if it was inherited from a PROI. So for example, if my dad had a property in Dubai, he bought it when he was a PRY, but later on he gave it to me. I inherited that property. Then also it is fine. So either it should be acquired when you are a PRY or it is inherited when you are from a PRY. Only then you can hold it. Means what you are trying to say, sir? Sitting here in India, I cannot have a property outside India. Looks like that's what you are saying, but that's not true. We said that for now, only if you acquired when you were a PROI or when you inherited from a PROI, it will be okay. I'll give you examples, sir. For example, Rishabh Bhaiya. Sir, Rishabh Bhaiya had been in UK for 20 years. He is in UK for the last 20 years. Now he wants to come to India. My question is, sir, in 20 years of UK, he had a lot of properties in India, in UK. Will he have to sell that property or can he continue to have it? Sir, he can continue to have it because he had acquired it when he was a PRY. Number two, sir, what about the foreign currency accounts? He must be having one bank account with JP Morgan. In that bank account, there must be some pounds also. There must be some pounds also, some money also. What about that money, sir? We said, no problem. You can continue to have that foreign currency account. We have no problem, guys. Whatever you had when you were a PROI, we are not saying you get rid of everything. No, no, you can continue to hold that as it is. We have no problem at all. And one more thing, very importantly, sir, after coming to India in the year 2026-27, what did Rishabh Bhaiya think? Rishabh Bhaiya thought that was in London. I have a building. That building is of one lakh pound. That building is of 1 lakh pound. Let me sell this building and let me buy a new property in UK. Let me buy a new property in UK. New property in UK. Sir, if he wants to buy a new property in UK using the money which he already has in UK, trust me, RBI approval will not be required. RBI's approval will be required only when you are taking money outside India. But if I already had some income in UK, if I already had some money in my bank account, if I already had this income, if I had money in my bank account, I had some rental income, sir. I had some rental income also from this property. Using all that income, if I buy a new property, RBI's approval will not be required because I'm not taking any new money outside India. I'm using the money which is there outside India to purchase a property outside India, not something which should bother RBI. Okay, please come here. Sir, there are four RBI clarifications. Remember the Rishabh Bhaiya's example that I gave you. Only that will help. Okay. Are you getting my point? Huh? Listen to me. Sir, Rishabh Bhaiya's example, any foreign currency account, when he was a PROI, he can continue that even after he becomes a PRI. Number two, sir, any income from employment, business, vocation outside India, when he was a PROI, or from investment when he was a PROI, or from gift or inheritance, will all continue. Sir, if I had a property and from that I am getting rental income, I will still continue to get rental income. No one can stop me. Number three, forex held outside India, acquired through inheritance. You can drop number three, read number four. Very important. Sir, a person resident in India, as in Rishabh Bhaiya after coming to India, may freely utilize eligible asset abroad or income or sale proceeds therefrom after they return to India for making a fresh investment abroad without RBI's approval. So if you have an asset outside India, so the income that is coming from that asset or the sale proceed of that asset, you can use it to purchase, make a new investment, and you will not require approval of RBI, provided that cost of investment is made completely out of eligible assets. You are not taking new money outside India. Whatever is there outside India, from that only you are making a new investment. So we don't have any problem. We will allow it. We don't have any problem. We will allow it. Are you with me? Yes, sir. Yes, sir. Next point, guys. Sir, a PR, the section that the thing that you read in 6.4, see, there are three questions based on that. Now, 6.5 is a mirror image. It is from the PROI's point of view. PROI may hold Indian currency, Indian security, or immovable property in India. provided it was acquired when he was a PRI or inherited from a PRI. So what we studied for PRI, no, that is the same here for PROI. So PROI can have any property or investment in India if it was acquired when he was a PRI or if it is inherited from a PRI. Only then he can continue to hold it, not a problem. Okay. Okay, sir. Now, to give this chapter a closure, there's just 1.5 page left. Listen to me very carefully, sir. Now you have to study three things, not Disney Hotstar. You have to study three things. So now you are going to study something called as foreign exchange management, permissible capital account transaction, regulations 2000. For capital account transaction, you are going to study permissible capital account transaction regulations 2000. For rules for current account transactions, sir, you studied foreign exchange management, current account transaction rules 2000. Sir, look at the difference in the name. Sir, this is very important. I told you one thing. Current account transaction is freely permissible unless prohibited. But capital account transaction is prohibited unless permitted. So we have to make a regulations to permit capital account transaction. Okay, but in current account transaction, we had made schedule 1 which spoke about prohibitions. There is a difference, sir. You need to remember this name. In exam, you will get marks only if you write schedule 1 of foreign exchange schedule 1 of foreign exchange management, permissible capital account transaction regulations 2000. Only then you will get marks, otherwise you'll not get marks. So please be very careful, sir. Guys, hello. Sir, schedule 1 talks about transactions which are permissible for PRI. Schedule 2 talks about transactions which are permissible for PROI. But in this, sir, there is a regulation 4. This regulation 4 is something which talks about prohibition. Listen to me. Sir, regulation 4 is very clear, and regulation 4 says that for a PROI, there are certain transactions in India that we will never allow. For a PROI, there are certain transactions in India which we will never allow. Sir, you cannot invest in chit fund business of India. You cannot invest in a Nidhi company. You cannot invest in chit fund. You cannot invest in Nidhi company. Sir, you cannot investment in agricultural activities. You read this. Sir, you cannot invest in the business of chit fund, Nidhi company, agricultural or plantation activities. Sir, real estate business. We don't want you in real estate business also. We don't want you to for construction of farmhouses. And we don't want you for trading in TDR. Sir, what is TDR? Sir, TDR is transferable. TDR is transferable development rights. Transferable development rights. We don't want you to do trading in TDR, sir. This is super important, sir. It will come in your exam, sir. It will come in your exam, sir. Please listen to me very carefully. It is definitely going to come in your exam. Please listen to me. Sir, chit fund business, Nidhi company, agricultural or plantation activities, real estate business, construction of farmhouse, and trading in TDR. Trading in TDRs. Please understand these are the things where you cannot invest. Remember along with me, such chit fund and Nidhi company is one and the same thing. After that, agriculture and plantation is something that India can take care of itself. Sir, after that, real estate and farmhouse is one thing, and then you can say transferable TDRs. TDRs. Okay, so these are the points that you need to remember. In this, you cannot invest. But sir, you cannot invest in real estate business also. We said you cannot invest in real estate business, sure. But real estate business has some exceptions. As in, these things are not real estate business. What things, sir? Real estate business does not include development of township, construction of residential or commercial premises, roads or bridges, and registered REITs. REITs is real estate investment trust. So basically, a PROI cannot invest in real estate business, but a PROI can invest in development of township. He can invest in construction of residential premises, or in REITs. He can invest in these things because these things are not real estate business. So if a person wants to come and invest in township, he can do it. So what is he not allowed to do, sir? So basically, he's not allowed to do trading in real estate. Like if you're buying property, selling property, buying property, selling property, you are prohibited from doing that. Okay. So a PROI cannot do these things. But sir, similarly, we have one restriction for from PRI also. Sir, a PRI as in Indian people. We said Indian people kindly don't do any transaction with North Korea, Democratic People's Republic of Korea. You see North Korea? When I see him, I remember the word momos. I don't know why. But anyway, sorry, sorry. Sir, I said North Korea. North Korea. Democratic People's Republic of Korea, North Korea. Just a little to enlighten the mood, to lighten up the mood, sir. Nothing serious, okay? So you cannot make investment in North Korea. We said stay away from the people of North Korea. You are not allowed to deal with the North Korea people. Who? Indians. PRI. Okay. So this is very important, sir. Prohibition for PRI. But apart from that, what are the things which is permitted for a PR? What are the things which are permitted? Guys, you don't have to remember the schedule. Just read along with me once. Sir, for example, tomorrow, if you have some money and you want to invest outside India, what are the things where you can invest? This schedule will tell you that. Schedule 1 says that you can invest in any foreign securities. You can purchase shares of any companies outside India. You can take foreign currency loans if you want. You can have any immovable property outside India. Sir, you can give guarantees for outsiders. You can give guarantees also. Sir, you can take loans and overdrafts. You can give loans and overdrafts. You can take loans. You can give loans. You can have a foreign currency account. If you have a foreign currency account, that is also fine. You can have a foreign currency account outside India. Sir, you can take an insurance policy outside India. And you can take derivative transactions also outside India. So you can do these things. You can invest in foreign companies. You can invest in securities. You can invest in derivatives. You can invest in immovable property. You can have foreign currency account. You can give loans. You can take loans. You can give guarantees. You can take insurance policies. You can do these things. But guys, please note. And what about PROI? Sir? PROI can also do similar things in India. So they can make investment in India. That's it. Don't read ahead. They can make investments in India. They can have immovable properties in India. They can give guarantees in India. They can take deposits from India. They can give deposits in India. They can have foreign currency account in India, and they can undertake derivative contract. These are the things that they can do. But but see, they cannot come to India and take insurance. Insurance is something that they cannot take in India. We can go outside India and take insurance policy, but they cannot come to India and take insurance because insurance is a risky business. Sir. We don't want that India is paying to outsiders. So we said outsiders cannot come and take insurance in India. Sir, this is your schedule 2. Schedule 1 says what are the things that Indian can do outside India. Schedule 2 says that what are the things that outsiders can do in India. You don't have to remember this, just remember it casually. But, sir, is there a limit? Is there a limit to how much I can invest outside India? Law said the limit is same $250,000. $250,000. Sir, so what are you saying? Sir, you are saying that for Schedule 3 of current account transaction, there was a limit of 250,000. For Schedule 1 of capital account transaction, there is a limit of 250,000. So you are saying total there is a limit of 2 lakh 500k. So you are saying total limit of 500k. So the answer is no. The total limit is only 250k. It is not each. The total limit is only 250k. So the current account transactions also that is allowed, and the capital account transactions also that is allowed. Per annum, you can do up to $250,000 only. So for example, if I buy an immovable property of $200k, and if I want to go to travel, which is a current account transaction, and I want to spend $60k, for example, the limit got exceeded, sir, and I'll have to take RBI's approval. The limit is together in aggregate. You see, the limit is drawal of foreign exchange as per Schedule 3 of current account transaction shall also be subsumed within the above limit. Subsumed within the above limit means the Schedule 1 of capital account transaction and Schedule 3 of current account transaction together will be $250,000. And the last line for this chapter, sir, provided that no part of forex of $250,000 shall be remitted to non-cooperative countries and territories. Non-cooperative countries, NCCTs. NCCTs is non-cooperative countries and territories, which is notified by FATF, Finance Action Task Force. Sir, in India, we have someone called as Financial Action Task Force. If they notify some country as non-cooperative, for example, Pakistan, it is a non-cooperative country. So you cannot ever invest there. It is restricted. It is prohibited. You cannot invest there. Sir, this is your lump sum comprehensive revision of your chapter FEMA. To end the chapter, it says, sir, do what you can with all you have wherever you are. Sir, sometimes our 100% may not be the best in the market, but what matters is we give our 100%. Guys, after this revision, there is something that you need to do to take control of your chapter. That is, go and solve the question bank. You should have my book. This is something which I feel is very mandatory for you. If you go and look at my question bank is the only question bank in India, sir, which has keywords highlighted and which is very easy and smooth to read. So once you have this book, your last day revision becomes very easy. Your last day revision becomes very easy. So at this point in time, there is something that you need to do. You need to go and have the question bank and you need to study it. For today, what I'll do, FEMA chapters PDF and FEMA's question bank. Both of it I'll upload in my Telegram for once so that you can look at the demo and you can see. But till you use that PDF, you cannot get the PDF of this whole chapter. I cannot release that. But if you enjoy that PDF, you take a printout and read from it. If you enjoy it, order the books meanwhile so that it reaches you till the time you are done with FEMA. But before I end this session, I want to tell you that, guys, I'm very sure that when you start your CA intermediate journey, you are very passionate about clearing your exams in the first attempt. But you have to understand there is a reason why 85 to 90% of the people are not able to do it. There is a reason why people start with both group and then they come to one group and they are not even able to clear it with good marks. The reason is that we sometimes don't do what we are supposed to do at the right time. Please understand that whatever your results will be, it will not be decided after your exams. Your results will be decided now based on the efforts that you're putting today. So make sure that you don't care about anything that is going to happen in future. Your only focus should be in taking care of today. So today have to revise this chapter. Today you have to solve this question bank, and then you have to keep law aside, take some other subject, and you have to read that. If you are able to, so every day is a battle. Every day is a battle. Some battles you will win, sir. Some battles you'll lose also. But if you win maximum battles, then the war of CA intermediate, you'll win that war. Sometimes you'll lose also, sir. Sometimes you'll be sick, you'll not be able to study. Sometimes you'll have some other problem, you'll not be able to study. That's okay. You lost a battle. That's fine. But when you win majority of the battles, that is when you'll win the war. So don't worry about the war. Focus on the battles. Win the daily battles. It's a fight every day. And if you lose today, don't carry that burden tomorrow. Start with a new zero energy, start with 100 energy tomorrow and win tomorrow's battle. Your focus should be my each and every day is productive, my each and every hour is productive, and I'm not wasting a lot of time. I'm a human. I'll make mistakes. I'll waste some time also. I'll get distracted also. I'll do overthinking also. But along with all these things, I'll study also. And once you do that, I can promise you that you will get very good results. So now I want you to go to the comment box and with your wholeheartedness, write one time you have to write it down. Don't copy paste. Write it down with a lot of power. I will give my 200% in this exam. I'll give my 200% in this exam. This is what you have to write. This is what you have to write down under each and every video of mine as a constant reminder for yourself that my work is to do my best and I'll give my 200%. That is something you need to know. Okay. So do make sure you do that. And remember the like target of 200. I hope that you'll make me achieve that. Okay. I'll keep bringing more such revision videos for you. But for that to happen, you have to let me know in the comment how did you find it? Okay. How did you like it? And do refer with all your friends because you can tell them that now my revisions videos are also available in 100% English exclusively for you guys. Okay. Thank you so much. That's it for today. I'll see you in the next session. Until then, study well, keep going, keep smiling, stay happy, and stay focused. This is your CA buddy Shubham Singhal signing off. Bye bye.